So I was just glancing at some of the latest financial reports, and it's kind of wild how much these things can swing quarter on quarter.
Oh, yeah. It's like trying to predict the weather sometimes, right? I mean, you see all the data, the trends, and then something unexpected just throws everything off.
Exactly. I saw NTPC Limited release their key performance highlights, and it's pretty dense, but it seems like there are some interesting bits in there. So, where should we even start?
Well, let's begin with the capacity. It's showing an increase of 2,724 MW in the NTPC group's installed capacity, reaching 76,598 MW by the end of December 2024, compared to 73,874 MW the year before. That is quite a jump.
Okay, so that's overall, right? What about just NTPC itself?
Right. So for NTPC standalone, we're looking at an increase of 1,330 MW in installed and commercial capacity, climbing to 59,168 MW from 57,838 MW. So a solid growth for sure.
That's good growth. Now, what about actual power generation? Any insights there?
Absolutely. So gross generation hit 91.250 BUs for the quarter ending December 2024, up from 89.467 BUs the previous year, a 1.99% increase, and a similar increase for commercial generation too.
And how does that look compared to the previous quarter?
Actually, compared to the quarter ended in September, the gross generation has increased by 3.15% from 88.463. So they've shown some solid progress from the previous quarter.
Okay, that seems pretty steady. What about the energy they actually sent out to customers?
So energy sent out reached 85.055 BUs in December 2024, which is up from 83.851 BUs the previous year, a 1.44% rise, and also 3.44% up from the previous quarter.
That's a lot of power. I mean, how do they manage to produce that much?
Well, that's where coal production comes in. And interestingly, they produced 10.98 MMT of coal in the quarter ending December 2024, compared to 8.09 MMT in the previous year, same quarter, which is a pretty massive 35.72% increase.
Wow, a 35% jump. So they're producing more coal, I guess, to keep up with the demand?
Yeah, and that's not just more coal being mined, it's also about using it efficiently. And the PLF, which is plant load factor, is a good measure of that.
PLF, I think I've heard that term, but what exactly does it mean?
So PLF is basically how much a power plant is operating compared to its maximum capacity. It's like if you have a car that's supposed to go 100 mph, the PLF is how often you're actually driving close to that speed.
Okay, so a higher PLF means they're utilizing their plants more efficiently?
Exactly. So the PLF for NTPC's coal plants is 75.98% in December 2024, which is about the same as the previous year. But for gas, it's down quite a bit from 7.72% to 3.42%. So gas is being used less.
And what about the renewable energy sources like solar and hydro?
Right. For solar, the PLF increased a little from 18.71% to 20.26%. And for hydro, it was up slightly too, from 21.22% to 22.11%. But small hydro saw a huge decrease, going all the way down from 44.35 to almost zero.
Okay, so it looks like coal is still the main player, but solar and hydro are contributing a bit more, well, except for that small hydro. So what do these numbers mean for the company?
Well, it shows that they are really pushing their coal output, but also moving to other sources like solar, and it will probably affect their future strategies.
And what about plant availability? Does it say anything about that?
Yes, the plant availability factor, or PAF for coal, has increased from 86.24% to 89.58%, which is quite a jump. And gas plants are also doing well, going from 92.43 to 96.14%.
That's good. That means they're keeping the plants running smoothly. So what about their fuel sources?
Well, they are consuming more domestic coal, jumping from 60.23 MMT to 65.51 MMT, while imported coal has significantly dropped from 2.15 MMT to only 0.24 MMT. So, a major shift there.
That's interesting, a big move towards domestic coal. I guess it is better for supply chains too, right?
Exactly. And gas consumption has also gone down from 2.05 MMSCMD to 1.06 MMSCMD. They are really cutting back on that, it seems.
So basically, more coal, more solar, less gas. That seems to be the overall trend. Is there anything else important?
Yes, the average tariff has increased slightly from rupees 4.57 to rupees 4.68. So they're charging a little more per unit now. So it's a good indication of inflation, maybe.
Okay, that's quite a lot of numbers to take in. So I guess it's important to remember we are talking about financial results. So, disclaimer, we advise investors to check with certified experts before taking any investment decisions.
Absolutely. And speaking of results, they also declared a second interim dividend for the financial year 2024-2025 at the rate of rupees 2.50 per share, which is good news for shareholders.
Okay, so they are sharing some of that profit with shareholders. That's always good to hear. And what about the actual financial results? What can we gather from that?
Well, the standalone financial results show a revenue from operations of 41,352.27 crore rupees for the quarter ended December 2024, which is up from 39,455.28 crore rupees in the previous year, a solid increase there.
And what about the profit? Is that also up?
Yes, the profit before tax is 6,986.39 crore rupees compared to 4,499.78 crore rupees in the previous year. It's a pretty impressive jump. So it seems like the company is doing pretty well.
So it's basically more revenue, more profit. What else did you notice from the unaudited results?
Well, the net profit after tax for the quarter is 4,711.42 crore rupees, and the earnings per share are 4.86. And when you exclude some regulatory adjustments, it goes up to 5.23. So things are looking positive overall.
All right, so the numbers seem good, both on the operation side and the financial side. I wonder how the consolidated results look.
Well, the consolidated revenue from operations is 45,052.82 crore rupees for the quarter, which is more than the standalone results. And the net profit after tax is 5,169.69 crore rupees. Again, more than the standalone.
Okay, so the group as a whole is performing well. How about earnings per share for the consolidated results?
The earnings per share, including regulatory adjustments, are 5.22. And if you exclude those adjustments, it's 5.57. So it's pretty good growth overall.
This has been very helpful, I must say. One question, I was just wondering, what is the significance of the regulatory deferral account balances they keep mentioning?
So think of it like this. It's a way to account for costs and revenues that are deferred due to regulatory decisions. So they're not recognized right away, but rather spread out over time. Like if you have to pay for some kind of service in installments.
Ah, okay, that makes sense. So it's basically a way of keeping the books clean when regulations make things complicated. So what about debt? Any information there?
Yeah, they mentioned the paid up debt capital. For standalone, it's around 1,82,094.45 crore rupees. And for consolidated, it's around 2,36,694.50 crore rupees.
Okay, so they have quite a bit of debt. It would be interesting to watch that in the future. Anything else we should keep in mind?
Absolutely. The company has maintained a good security cover for its listed debt securities. They are compliant with the financial covenants. That's very good news for investors.
That's definitely a relief. It's quite a complex report, but all these key performance highlights show how the company is managing things on both a performance and financial scale. It's quite amazing. What do you think of all these results?
Well, overall, it seems like NTPC is managing its operations well, shifting to more sustainable options and also generating good profits. It's good to see growth and progress like this.
Absolutely. And it's important for our listeners to stay updated with these kinds of insights. And if you are finding all of this informative, please like, share, and subscribe to our YouTube channel for for more updates and discussions.
Yeah, and it's also good to see the level of detail in these reports. They are being pretty transparent, and that's important when you're dealing with large investments like these.
Well, that's true. It's clear that NTPC is a major player in the power sector, and their strategies are definitely impacting the energy landscape. Any final thoughts?
Well, with the push towards renewable energy and the increase in power generation, I'd say NTPC is definitely a company to watch closely. They're playing a crucial role in India's energy future.
I agree. It'll be exciting to see how they evolve in the coming years, and these reports give us a good glimpse into their current strategies.
Indeed. And we can always dive deeper in the future reports too. There's always more to analyze.
Exactly. There is always more to discover. Thanks for walking me through all of this.
My pleasure. It's always fun to dive into these reports and uncover the details.